Hi, welcome to Tahir Tech. Today is our topic is long-term care insurance basics. Long-term care insurance pays for service to help individuals who are unable to perform certain activities of daily living without assistance or requires supervision due to a cognitive impairment such as Alzheimer's diseases. Features of long term care policies. The best policies pay for care in a nursing home, assisted living facilities, or at home. Benefits are typically expressed in daily amounts with a lifetime maximum. Some policies pay half as much per day for at home care as for nursing home care. Others pay the same amount or have a pool of benefits that can be used as needed. Criteria for the beginning of payments. The policy should state the various conditions that must be met. They can include the inability to perform two or three specific activities of daily living without help. These include bathing, dressing, eating, toileting, and transferring or being able to move from place to place or between a bed and a chair. Cognitive impairment. Most policy cover stroke and Alzheimer's and Parkinson's diseases, but other forms of mental incapacity may be excluded. Medical necessity or certification by a doctor that long term care is necessary. Most policies have a waiting period or elimination period. This is a period that begins when an individual first needs long term care and lasts as long as the policy provides. During the waiting period, the policy will not pay benefits. The policy pays only for expenses that occur after the waiting period is over. If the policyholder continues to need care, in general, the longer the waiting periods, the lower the premium for the long term care policy. Benefit periods for a long term care may range from 2 years to a lifetime. Premiums can be kept down by electing coverage for 3 to 4 years, longer than the average nursing home stay instead of a lifetime. Most long-term care policy pay on a reimbursement or expense in occurred basic up to the policy limits. In other words, if the policy has a $150 per day benefit but the policyholder spent only $130 per day for a home long-term care provider, the policy will pay only $130. The extra $20 each day will in some policy go into a pool of unused fund that can be used to extend the length of time for which the policy will pay benefit. Other policy pay on an indemnity basis. Using the same example as above, an indemnity policy would pay $150 per day as long as the insured need to and receives long-term care service regardless of the actual outlay. Inflation protection is an important feature, especially for people under the age of 65 who are buying benefit that they may not use for 20 years or more. A good inflation provision compounds benefit at 5% a year. Without inflation protection, even 3% annual inflation will over 24 years reduce the purchasing power of a $150 daily benefit to the equivalent of $75. 6 other important policy provision. Elimination period. Under some policy, if the insured has qualifying long-term care expenses on one day during a 7-day period, he or she will be credited with having satisfied 7 days toward the elimination periods, i.e., the time between an injury and the receipt of payment. This type of provision reflects the way home care is often delivered, some days by professionals and some days by family members. Granted Granted renewable policy. This must be renewed by the insurance company, although premiums can go up if they are increased for an entire class of policyholder. Waiver of premium. This provision ensures that no further premiums are due once the policyholder starts to receive benefits. Third party notification. This provision stipulates that relatives, friends, or professional advisor will be notified if the policyholder forgets to pay a premium. Non-forfeiture benefits. These benefits keep a lesser amount of insurance in force if the policyholder lets the coverage lapse. This provision is required by some states. Restoration of benefits. This provision ensures that maximum benefits are put back in place if the policyholder receives benefits for a long time, then covers and goes for a specified period, typically 6 months, without receiving benefit. Thank you for watching my video. If you liked my video, please subscribe my channel and press the bell icon for future video update. Thank you.